Thank you very much, Konstantinos. What a build-up. I do have a bowler hat and an umbrella, but I haven't brought them with me. But I'm not a leading figure in finance. First of all, my apologies to you for being the first of your speakers today, perhaps the only speaker to speak in English, although I did study a little Greek at school. I'm afraid it was classical, not demotic. So we're reduced to the rude Anglo-Saxon tongue. As Konstantinos says, I worked for many years at Euromoney. I now run a little consultancy of my own called ChuteCourt Asesores. The clue is in the name. I do a lot of stuff in Latin America, but not only in Latin America, advising banks and funds, government agencies, and so on. So, in the immortal words of Monty Python, now for something completely different. The theme of my brief series of remarks and observations today is disruption. Now, several of the earlier speakers have spoken about this, particularly in the sense of technology, which comes up, of course, a great deal in all of our discussions about the insurance industry. Mrs. Antonaki from the Hellenic Association of Insurance Companies spoke, I thought, very cogently and coherently on this point. Anyway, disruption. That abstract noun, etymologically from the Latin, of course, to break apart or split, is, in recent jargon, most commonly paired with its alliterative friend, digital. It is in the mood of the time to speak always approvingly of digital disruption, so much so that to question it is to invite silence. This digital stuff is, of course, part of a much wider range of disruptive forces, but I'm getting ahead of myself. At a conference on financial inclusion earlier this year, hosted in Nairobi by the excellent and go-ahead Central Bank of Kenya, I heard many times about the revolution wrought in financial services in that country by mobile banking. In Kenya, a from-the-ground-up business in mobile telephone banking grew as an alliance between a phone company and a traditional bank. Maybe you all know about this. It's called M-Pesa, to the stage where it offers banking and financial inclusion to 80% of a previously largely unbanked population. Perhaps you will all agree that such a groundbreaking shift in people's lives is incontrovertibly a good thing. And perhaps you're right. Perhaps it is. But as I found, even to ask the question of why it is a good thing invites shocked confusion and no answer. Is it not arguable that financial inclusion in this way creates means to pay before wealth, prosperity, and the ability to pay in an economic sense have been addressed, and that therefore such a system serves to create new but unfulfillable aspirations that contribute not to human happiness, but to its absence? It's not exactly a progressive question, I agree, but it is a question. Anyway, why did I start thinking about these things when I was asked to speak at an insurance conference? Because a few days ago I read a quotation from a chief executive officer who said, "We are a new age insurance company, and our partner believes it can create value." The partner in question was later in the same article described as a company who, only after years of building a product and iterating its features for itself, does it launch and expose a key product pillar to other customers. By then, it's too late for the incumbents who have not responded. The company in question, of course, is Amazon, the disruptor-in-chief. Alexa, insure my house. Alexa, get my car repaired, you could imagine. A couple of years ago, I had the privilege of interviewing on a conference stage Jamie Dimon, Chief Executive of JP Morgan Chase, and I said to him, do you worry more about Wells Fargo or Citi or Bank of America, or do you worry about Facebook Bank or Google Money or Amazon Finance? And of course, he said he worried more about the latter group, and that has subsequently become an orthodoxy. Thus, I introduce a wider theme of related disruptions. Here's a little list. A Middle Eastern day of reckoning approaches. Driverless electric cars. Cashless economies. Our children's jobs are yet uninvented, although yet the first human being who will live to be 150 has already been born. Cyber warfare, fake news, social media undermining democracy, old alliances crumbling, new alliances forming, isolationist America, expansionist China, Quitaly, or Brexit, or as I think it's becoming, BINO, which stands for Brexit in name only. Here are disparate things. Some are conceptual, some are technological, some are political. And while it's hardwired into our nature to imagine that the moments of our own lives are more difficult, more complex, more exciting, and more momentous than have been those of our forefathers, while that is an error we must guard against making on the whole, the blizzard of novelty in our days certainly seems just especially confusing right now. And it is in the midst of these confusions that we must run our businesses and live our lives. Let's glance first at the political. You can take your pick where you look. Mr. Erdogan, reinforced by re-election, is he a more dangerous presence on the global geopolitical stage than is Mr. Putin, reinforced by a very enjoyable and peaceful World Cup? I would happen to say in answer to that question, yes. And remember that many of the world's most significant shifts of the historical tectonic plates have begun within a few miles of Constantinople. Will the West, whatever that is, I might come back to it if we had time, will the West have to pick a side between Saudi Arabia and Iran? Israel and the United States, both members of the West, already have. And those two gentlemen I've just mentioned in Turkey and Russia are on the other side. If you want, you can throw the UAE into the first group, Syria and Qatar into the second. And is poor Lebanon likely to be the battleground for these grand alliances? I rather fear it is. So, will European countries pick sides in this? And speaking of European countries, are we witnessing a new rift between East and West? The Visegrad countries seem in no mood to submit to the social and migration messages of what likes to think of itself as core Europe. Communism and fascism are both European inventions, the former more associated with the East, the latter with the West. But are the countries in the West now flirting with a new form of communism and those in the East with a new kind of fascism? I ask this notwithstanding the fact that my essential thesis is that we're living in a post-political age. But these are symptoms of that post-political age. Neither right nor left is coherent, and unexpected policies and ideas spring fully formed from unexpected places. The gaze inevitably wanders to Brexit, then to Mr. Trump, then to the electoral successes of new post-political movements, for good or ill, I make no judgment in this point, in France, in Holland, in Spain, Germany, Italy. But ditching political orthodoxies is not confined to the developed world. I do a lot of work, as I said, in and with Latin America. It's a favorite theme of mine. In Mexico on Sunday is likely to be elected as president a man who's a bit like our own dear Jeremy Corbyn, except that he's also a bit like Donald. And the political parties of the 20th century in Mexico are disintegrating. Down in Brazil, the people's favorite candidate for the October presidential elections is in prison. The second favorite, who at least currently has the ability to run, is an extreme right-winger, although with statist, leftist, economic leanings like so many such politicians. He loves to poke the bien-pensant with his great admiration of the military dictatorship in Brazil and suggests the best way to deal with drug dealers is to have them exit helicopters before the helicopters have landed. Mr. Bolsonaro is a bit like Mr. Duterte in the Philippines, where we can see just one more example of how politics is wildly divorced from the late 20th century Eurocentric liberal consensus, and it is taking hold the world over. So from the geopolitical, and I didn't even mention China or North Korea, and the post-political, and the surprises that get thrown up when the demos gets to work, to the technological. Of course, some political iconoclasm has successfully used technology, even springs from it. Thierry Baudet in the Netherlands, whom I know, grew his political party from a standing start to a parliamentary force almost entirely through social media and his own charm and intellect, of course. And obviously it has been Russian Facebook trolls that have controlled every electoral decision of recent times, we're told. Actually, I'm afraid I don't really believe that. But its constant repetition does Vladimir Putin's reputation for omnipotence a bit of good, and I'm sure that he likes it. And nor, by the way, do I believe that there are fairies at the bottom of my garden. But I definitely do believe that point about our children's jobs, let alone our grandchildren's, not having yet been invented. It resonated, did it not, when a top American banker said the other day that if you touch a keyboard for a living, your job is toast by 2020. That's quite soon. We ought perhaps at this point to consider further in particular what is disruptive to the insurance industry. And as I've already said, technological innovation looms large. You all know this, not just in the obvious senses of how insurance products are delivered, claims are processed and so on, although there are profound considerations there, naturally enough, portable big data access, on-the-spot customized pricing for customers, but also in the structures and methods of risk transfer, and maybe most far-reaching of all, in the technological disruption of your clients and their activities. How does one insure driverless cars? Indeed, who insures driverless cars? Hotels were easy, but how does the insurance services industry respond to Airbnb? How do artificial intelligence and neural systems challenge underwriting, change underwriting? What about smart shipping? We're in a major shipping center here. If the cyclical trough in the fortunes of the temperamentally pro-cyclical, I think, I mean, they always increase capacity too much in an upturn, cut in a downturn, and are unprepared for the next upturn. Is that fair? You will know better than I would. Anyway, if the economics of shipping and so forth, shipping insurance, were not enough of a headache, along comes a global trade war and our old friend technological disruption again, with new and smart ideas to drive efficiency and take out the laggards from the shipping industry. So what else is disruptive of insurance? If I put on back on my old Euromoney hat, I'd turn obviously to financial markets aspects, Solvency II, you've heard that endlessly for as many, probably more years than some of you have been in the industry, compliance with regulatory capital requirements. Might the imposition of those regulatory capital requirements actually weaken loss absorbability? As insurance companies issue, as banks have done, new forms of security, such as restricted Tier 1 bonds, securities, forms of hybrid capital that bring regulatory value through being deeply loss-absorbing and approaching equity characteristics. Elsewhere in the shifting capital structures of the insurance world are off-balance sheet risk transfer structured notes. Is there an analogy here to the fire and forget ABS market that caused banks and indeed the world economy so much trouble 10 years ago? And how much volatility of premium income in an economic downturn can solvency and minimum capital requirements take? I hope you didn't think my observations were going to be restricted to my travels in Africa. Of course, as well as insuring and reinsuring against loss, things out there in the real world, from oil rigs to power stations to our houses, our cars, our very lives, your sector is also the source of one of the largest pools of liquid capital for investment. In Europe, insurers deploy in the market something like 8 trillion euros. Similar quantum is invested by US insurance companies, and generating returns on those investments is obviously a primary function of your sector, of your companies, and indeed of your company's fiduciary duties towards shareholders. But how is that achieved in a low, no, or negative yield environment? Yield tourism, going down the credit scale into high yield or emerging markets, increasing exposure to equities, or alternative investments like real estate. All these strategies are being tried, and asset allocation is one of the main challenges for the industry, if one is a German insurance company contractually bound to a 4% return for policyholders, where does that come from when you have to pay to hold German government debt? I don't know why I pick on the Germans. There's nothing to do with soccer. At the same time as policy has driven rates down in the post-global financial crisis world, policy, through things like Solvency II, drives insurers to invest in safer, lower-yielding assets. So what can you do? There's a contradiction built into it. One answer is investment in infrastructure, and the insurance sector is often mentioned as the provider of capital to help close the so-called infrastructure gap. This is very fresh in my mind as I spent the early part of this week with a client, the PPP, Public-Private Partnership Agency of the Peruvian government. They've got a full range of projects for tender in case anyone would like to have a look. So my final point is that of all of these disruptions, the biggest disruption probably that has affected financial markets, your sector, any sector in the real economy, has been quantitative easing and cheap money. The biggest disruptor of markets and business in general. Will those wise heads at the European Central Bank in Frankfurt really bring QE to an end this year? And how will the unwind go? I don't wish to be pessimistic, but I fear the law of unintended consequences may apply. Ladies and gentlemen, perhaps we'd better consider buying some insurance. Thank you for listening.